Upstream, are you with me? Rainbow, color in the city, rushing through me. Downpour, upstream, are you with me? Feel it. Rainbow, color in the city, rushing through me. Downpour, upstream, are you with me?
Hello, everybody. It is Adrian Dunchik, CFP Charter Market Technician, CryptoBurp, and I welcome you to the second day of our 30-day recovery program. Please do let me know if you can hear me right, if you can see me right. Just activate, inside of the chat. Do let me know if everything is readable. We're gonna have a little bit of the presentation today. I prepared something for you. Um, and well, it's gonna be probably a session between 30 and 45 minutes as I try to time it this way. Just a heads up for everybody who's participating, and the entirety of the reason for why we're meeting is basically to help you rebuild the confidence, to help you get back basically what's lost over the recent market turmoil, because let's face it, it's been definitely an absolute carnage, right? Not only for Bitcoin, but also for altcoins. I've just noticed there was an incredible chart, by Chris Jack, who showed up that the median performance in Binance listed futures, Binance listed coins, and Binance is the number one centralized exchange. Huge shout out to them again. We were partners, we're friends. I know them for many years. However, it's a fact they're the largest one. And if the largest exchange listings end up being 95% down year to date on the median, right? Which means that the most repetitive statistical outcome of the listing from the beginning of the year until now is 95% loss, then it's an absolute carnage, which means that everybody who basically held altcoins, this year lost money. All right, including myself. And except that I'm proficient at losing money. I've lost money many, many times. I've committed to a lot of flawed games, in terms of something that I planned for, hoping for the best, while it actually turned out, far from the best. It turned out to be a very bad idea. I lost a lot of money, got hacked, rug pulled, scammed, exit scammed. People stole money from me. My friends stole money from me. So in the end, I've been there. I know exactly what it means to lose the confidence, to fear for what's ahead, to fear if I'm gonna make it. That was the narrative. That was the dream I had for a very long time in the early days of my career, until I learned how to be profitable. I learned until I got the proper skills, basically with a proper guidance. Well, I wish I had a mentor. I wish I had someone to guide me basically through the whole process. It was me discovering, through the dirty, muddy waters and all the minefield throughout, all of these cameras, all of the misinformation flying all over the internet, which is so difficult to tell what is what and who is who. So I paid a lot of expensive lessons to be where I am right now. And my job with today's session, with this entire 30-day recovery program, is to help you avoid falling for the same mistakes, is to help you avoid falling for scams, is to help you rebuild your confidence so that after the 30 days of this free trading bootcamp, that we organize within our team at the Burbness, well, you have an opportunity. You've just joined one of the most reliable trading communities since 2017. And it's not just my word. There are a lot of words about that from many other people. So with you being here, well, we're definitely going to be tagging upon basically what's of the critical importance, right? About understanding understanding loss, understanding emotional battle, detachment, the process of becoming objective again. Those are just some of the merits, just some of the points that I think I had seen before on my end, and that you might be experiencing since you've joined just this program. Um, It's not difficult to find the right track, but you have to have the right guidance. So here is me trying to offer that for you. So before we dive in further, what you can expect is, well, definitely it's going to last through November 20th. All right, so we have 10 days to collect as much information as you can handle, to take as much guidance as you can handle, to take 24/7 support, from me, from my team, from everybody who's there, for the burden is just waiting for you to ask the questions and get the immediate answers. Uh, and that's what you can expect. Full coverage, full support from me, from my team for the next, well, not a little bit less than 30 days already, because the time flies fast. So without further ado, there is a presentation I prepared. There's a special document that I'm going to share later on with you throughout, but by the end of the session, I'm going to drop it inside of the um, on the Discord channel. Hold up one second. Hold up one second. All right. It seems there is some minor mess up on the restream side. Hold up one second. All right. So what we're gonna do? Like I said, we're gonna have a special presentation, uh, and we're gonna definitely be rolling through the next couple of minutes through what it is actually to recuperate all the losses, how it's possible to deny, and I should say, to fight all of the emotional detachment that everybody has, which is quite difficult. And okay, hold up one second. Give me a second, everybody. Let me just check real quick. Okay. All right, there's been some mess up on the restroom. It doesn't matter. All right, so for everybody who's watching, who's listening, in the end, well, we have the how to turn absolute worst investing mistakes into profitable trading strategy in under 30 days, because that's exactly what matters. That's exactly what is the current setup. That's exactly what's the current situation. If you think about it, um, that's a great fit for our program as we speak. All right. So with that in mind, well, we have quite a bit of the information right here. So to start, let's bring it on bigger. Uh, like I said, my story comes back to where it all started, with me being lucky a couple of times, getting a lot of money first, well, being lucky winner basically on early days of crypto, which was not obvious. You had to be at the right time in the right place. It was not something that I initially planned on, because I was doing forex, I was doing a lot of other things, but in the end, I joined crypto. My grandfather used to trade Bitcoin in 2012, as far as I can recall. He used it for as a utility tool, also for the football matches and so on. In the end, in the end, um, we had a situation where we had to decide, okay, what sort of profession I had to do, right? Whether I wanted to be and follow my trading, my career on the chemicals engineering technology side, or I want to transition to something else and be much more on the A man on my own basically have much more of the ownership within what I did, and that's basically that's basically what I decided. Okay, I wanted to pursue my own thing, and then basically see how it went, for what I was capable of achieving. So in the end, that of course, costed me committing a lot of mistakes. Like I said, fucking up so many times that in the end, it was a very you know very expensive set of lessons. Let's put it this way, right? However, the biggest mistake, that I'm going to cover on later on today is actually a multiplication of those, right? So basically, you can have a little bit of an exercise, because if you've ever fought the tape, right? If you ever fought the market, if you ever fought, what the President Trump was doing, what the Fed was doing, well, you can raise your hand, because that's exactly what I did as well, right? If you have used, oversized positions, well, I'm guilty of that as well. Over leverage margin, same here. Fighting the trend, lack of stop loss, no trading system, confusing trading strategies, right? Cognitive and emotional mistakes. It all it all contributed to letting losers run, and basically following, fake people, following first comes and so on. That's something that I did. It's a little bit of a testimony, something, of all the mistakes, and there's plenty of more that I did. All right. And if that sounds familiar, right, then if the same thing happens again and again, then, well, truthfully, am I really this bad, or there's some pattern to it? Well, it appears that there's a pattern if you force it this way, right? Because it's often dictated, by how we feel about the market, instead of how the market feels about us, if that makes sense, right? So it's not whatever we think of the market, it's whatever the market actually does. So it very often happens that at the tops and the bottoms of the market, which is exactly where we want to time it, best, this is where we have the biggest, I should say, discrepancy between the reality and what we have in our minds. Right? In our minds, we are undefeated, especially if we have a strike, of winning, like I said, trades on the way. Let's say I won 10 trades in a row, then it makes me feel like I'm the best trader in the world, right? Or if I flip a coin, 10 times and it lands and I guess it right, it also makes me feel like I'm the best coin flipper in history. But in reality, I just got lucky, right? And this luck has nothing to do with my skill, because I just got lucky. If you find $100 banknote laying in a street, can you attribute it to luck, or can you attribute it to your skill? Right. Well, spoiler alert, there is nothing to skill to it. All right. So the same happens when we revert it. And if I lose, a lot of times in a row, if I lose 10 times in a row, then, well, can it be attributed to my skills, or can it be attributed to an external factors? Well, with losses, it's a little bit different, because wins are not guaranteed. Losses are. All right. And it's different. So wins are something that we have to fight really hard for, while losses, they come effortlessly. We don't have to learn to lose money, but we have to learn to win money, if that makes sense. All right. So there's this asymmetry. It's easier to lose money, and it's more difficult. It does require effort. It does require a lot of time, education, a lot of effort, commitment to keep the money as well. All right. For losses, anybody can be master at losing. All right. It doesn't require any skill, doesn't require anything. So it's easier to lose money. It's harder to make money. And knowing that this fundamental truth is ever present, well, I'd say that in the end, I'd say that in the end, um, we have to respect that. And it means that all the losses are guaranteed. That is, it's impossible to keep on going without having lost. And if we keep on going knowing that there are losses, well, it's all about how we manage them. All right. So it's only coming down to how well we manage the losses that we can become better traders. All right. And how to manage the losses where, especially, you have accrued a big loss, especially that you got a big loss, basically um, something that imagine you borrowed money. Imagine you took out the loan and you borrowed money, for um from your family, from your friends, and you lost it. All right. So it does come at a lot of emotional expense, right? It does leave you wrecked. It does leave you wrecked emotionally, it does leave you wrecked financially. Even the recent situation that happened with this massive liquidation cascade is that well, let's put it this way. A lot of traders lost everything, even if they were in low leverage, right? Which is something exceptionally unlikely. However, it does happen from time to time. Which also, like I said, just confirms that we cannot take things ever for granted, like, unless they are losses, right? We can take only losses for granted. So knowing that the losses is all managing the losses is only how about how we how we accept it. Well, then it becomes a little bit easier. So think about it this way: we do look at the grief cycle, right? Whenever you suffer a loss, whenever you suffer a different outcome than the one that you planned, all right, we're going to be faced with stage one, that is on the right hand side of this pie chart, that is denial. By denial, we understand a situation where we deliberately refuse to accept the reality. It's just we deny it. We say, okay, this is not happening. This definitely is a glitch in the matrix. The world is attacking me, and I'm not wrong. The entire world is wrong. I'm not wrong. The market is wrong. All right. So knowing of that, um, it only happens that if we continue to contribute to this denial, if we continue to stick with it, then we're gonna have to deal with anger, because the longer you stay in denial, the more aggressive you become, the more irritating it becomes. All right, the more of um, the more of an anger issue there is. Right. So like I said, all of a sudden you're starting wondering, okay, like, it's pissing me off so badly that I lost so much money, and the market is wrong, but at the same time, like, I lost money, so how's that possible? You know, you start being very, very emotional, even more than you were before. All right. So if you kind of like keep following this rabbit towards the rabbit hole, basically, you fall into proper anger. All right. And if you fall into proper anger, then our ego defensive bias comes up, because we say, okay, we are angry. We are angry at everybody else but ourselves. We are angry at the world, at the politicians. How could politicians, let it happen? They should ban, leverage trading. It's their fault, and so on, that I lost money. Well, in the end, of course, it's only our own responsibility. But it makes us feel angry, basically, okay? Because by denying the reality, by denying that we fucked up, we place the responsibility of our own actions on the outside. Like I said, on politicians, on market conditions, on whales, on manipulations and stuff like that. It doesn't matter, because in the end, I lost money, not them. All right. So then, when you process, kind of like feather from denial to anger, uh, then bargaining comes up at the next as the next part of the cycle. All right. So bargaining means, okay, maybe maybe I did something wrong. Maybe I fucked up. Maybe it's really not that the entire world is wrong. Maybe it's that me that is wrong. All right. And you start bargaining this, and okay, I should have sold better. I should have sold earlier. I shouldn't have invested that much. And you're kind of like putting a lot of guilt, a lot of there's bad feelings, on your shoulders, basically, because you're saying, okay, I fucked it up. I'm alone. There's no one left to help me. I'm heavily in debt. I have to give money back to the people that I borrowed the money from. And I should have done something better. But guess what? We're not going to be able to retrieve the past. We're not going to be able to travel back in time, at least not yet, maybe next century. We're not going to be able to go back in time and undo what we did. All right. Because otherwise, if we keep on bargaining, if we keep on following this denial, anger, bargaining direction, then we directly fall into depression. All right, we're starting feeling depressed because there's no hope. We're starting to feel really bad about ourselves, about the whole situation, because there is no hope. There is no help. There is no aid from anywhere, right? And we are left all alone. So the only constructive thing that we can do about this within this grief cycle that every single person goes through is acceptance, right? Then we say, okay, I fucked it up. I own it. I man up. I take responsibility for the losses. Here's where I am right now. This is the current status quo. This is my situation, right? I stopped bargaining. I stopped, putting the guilt on my shoulders for doing something wrong or that I could have done something better. But I did it, so it doesn't matter. I literally just wipe out, everything that happened in the past in terms of, putting my focus there. I stop looking back and I just look. Okay, this is where I am. This is who I am. This is my skills. This is, how much money I have. This is how much money I lost, and so on. The acceptance. This is where I learn and write it off as a lesson learned. All right, this is where I agree, deliberately choose to go for the moving on. All right, this is where I agree to move on. And only then, as soon as I move on, basically, only then the magic happens. All right, because you cannot ever be a profitable trader if you don't own up your mistakes. All right, so there are people who never, um, well, let's put it this way: there are people who never accepted their mistakes. There are people who continue to live for the rest of their life, in misery, in this complete delusion, because the cognitive dissonance, the denial, the stage one, this in psychological terms is called cognitive dissonance, where the information that we have wired up in our brain doesn't match the reality. That's what causes a lot of stress and anger, and then we're trying to backward rationalize with bank bargaining and all this stuff, right? So there are people who live their entire lives without acceptance, and there are people who live entire lives in depression, blaming everybody else and everyone else but them. They never reach acceptance, but it's only that after you reach acceptance that you can move on to be profitable trader. All right, so the first step is understanding the grief cycle. And as soon as we understand the grief cycle that everybody goes through after suffering big mistakes, after having this PTSD, we always go for denial, anger, bargaining, depression. And some people never reach acceptance because it takes a lot of bravery. However, if we put the acceptance to work, if we say, okay, I fucked up, but here's where I am, right? It's, what is it? It's 22nd October, 2025. Right? There are still a couple of weeks left until 2025 ends. There's still hope for me. There's still chance for me to rebuild it back, and so on. Right? Then this is where I open myself up basically to improvement and to going um, for recovery. All right. So the entire deal about being profitable, becomes of asking yourself why you want to continue. What's the driver? What's the mission? What's the goal that I want to acquire? What's the why? All right, it always starts with why. So if your why is to revenge traded, there is a high chance you're gonna assume, to yourself a flawed goal, because all the goals, have to be acquired basically in a manner that is possible to achieve, right? I mean, there is this SMART acronym. Some people of you perhaps are aware. The SMART acronym, and the SMART acronym stands for specific, measurable, achievable, relevant, and time bound. Okay, this is the simplest thing that your goal should have. If your goal isn't achievable, well, then you're wasting time. If your goal isn't time bound, you're wasting time. If your goal isn't specific, you know, then making it back is not specific. You have to be very specific about what do you want to do and what time, why you want to do it, and with what tools and so on. All right, so you have to answer yourself a question for why I want to achieve this goal. And if I achieve this goal, what's going to be the actual outcome? Okay, I'll be off the dead. I'll be able to continue to live on my life. And so you have to, well, not visualize it, but you have to literally script it down. You have to literally write it down, have this internal debate within yourself, okay, to understand what's the entire driver. Because just maybe you're gonna continue asking yourself the question is why? And you arrive at a conclusion that the only why that you would want to make it back is to revenge trade, is to defend your ego, is to defend, is to a little bit just like I said, move back in time and undo what you did because that's impossible. And from the day one, if that's your why, all right, because it just irritates you that you lost your money, then it's not a good driver, right? Because it's not quantitative. It's it's not gonna take you anywhere. You're still looking back, all right. And of course, in the end, if you have a goal that is set wrongly, you're going to search for something that is naturally called, well, confirmation bias, right? In psychology, in general, we can divide the biases, the emotional biases, the biases, the mistakes that we do, the errors that we do in life, in trading, anywhere, can be divided into cognitive that revolve around our cognitive skills, around our information processing, right? The brain wiring, or the emotional biases. So there are cognitive biases and emotional biases, right? Loss aversion, for instance, that we fear losing is an emotional bias. It doesn't have anything to do with how our brains are wired up, right? However, how we process the information, there's an information processing bias. I may remember something wrongly, for instance, right? When my wife tells me something, I tend to forget very fast, or tend to basically, just tweak it somehow and twist it and remember it wrongly. And so there are a lot of problems with the information processing as well, right? And one of those biases is called confirmation bias. All right, is that we selectively have a selective attention and selective focus on how we filter the information that we see and receive from the world, and focus only on what's fitting our agenda, fitting what's most often defending our ego. All right. So if you have a folding float goal that you pick, this why isn't good enough, then you're gonna continue to searching for this confirmation bias. And for instance, you see a list of 100 points, and all of the 99 points are against your goal, but 1 point is in favor of the goal. Then you're gonna ignore everything else, but focus only on the one that works, and you're gonna strengthen your bias even more. And you're just gonna give yourself one more reason to defend your ego, right? That's how it works. It's a little bit complicated, but as soon as you understand it, it's basically a little bit easier. So knowing that we have set for ourselves a lot of traps, that we're going to continue to defend our egos, that it's very likely and very possible that we're going to have a lot of traps as we go through the process in order to defend our egos, most often to undo what we did, to unfuck up what we fucked up. Well, then this is something that helps you get knowledge to fight it, right? Because it's only that you get awareness that there is something like that there are those processes, those biases that I encourage you to read on more about. It's all explained by behavioral psychology, right? Which explains basically the piece of psychology that explains our behaviors, why we behave that way we do, and most often we behave based on emotions rather than rational. So in the end, uh, the big axiom, the big statement, and the big truth of trading is that no holy grails exist. All right. So you have to immediately stop searching for 100% win rate situation. You have to immediately stop searching for this fake guru who's going to tell you exactly what you want because of the confirmation bias. Uh, you have to stop searching for this kind of like a golden setup that is going to fire up 100% of the time, because none of that exists. All right. The reality is too complex for any trading rule to exist forever. All right. So it's impossible, just like I said, to have only wins, but it's possible to have only losses, even though it's less possible. Still, so it is not the strategy. It's not that indicator. It is not the golden kind of like mechanic or golden indicator, golden strategy, golden system that makes us good traders. It is the persistence. And in fact, if you go ahead and check, any interview on YouTube, on Spotify with, I don't know, Joe Rogan, and whoever, you consider successful, who's made it, someone who's made it, someone who's self-made, someone who's a billionaire, someone who's, basically a little bit of an embodiment of who you want to be, like a role model to you, like an idol to you, then you're gonna see them repeat the same thing over and over again. That it is persistence, it is discipline, and they are synonyms. All right. So knowing that the reality is very complex, knowing that the future is uncertain, we cannot be ever certain about anything in the future, right? Uh, we have to understand that the markets are full of entropy, something that is unpredictable, and at times it is way more unpredictable than we would predict, if that makes sense, right? So entropy in the statistical terms is a function, is a metric telling us how much chaos there is around us. All right. In general, the more complex uh, situations, the more complex systems we talk, right? We're gonna be talking about trading system right in a second, but the more complex around, the more complexity around us, the more entropy, the more chaos. Because if there is, 10 things that can go off, well, it's definitely gonna be more chaotic than if all of them go all off altogether, than if there is one element that can go off, right? Which is why we have to understand that with 8 billion people on the planet, more and counting, you know, where hundreds of millions of people have access to trading accounts and are traders on an active, more or less basis, and each of those persons, is making their own decisions. There are 8 billion, well, not 8 billion, but let's assume, um, at least 1 billion people, who are trading traditional finance, crypto, doesn't matter altogether. Binance itself is close to 300 million people. So a good example there. So in the end, we have a lot of moving parts. So if all of those moving parts, basically just keep on making decisions in real time, it can be compared a little bit to you putting your hand inside of the beehive. All right, there's a lot of bees just flying around with completely random manners. It's all twisting, turning in completely random directions, and that's exactly the financial market, right? And once in a while, there comes this person, this beehive taker, that is basically, well, or wrongdoer, that just shakes it all over, basically just reshakes it, just I don't know, puts a new beehive, right? Just changes something that is beyond our control. All right. And and that's something that can be compared to the central because if we understand that once in a while there is a situation where everything that we know just doesn't match, everything that we know doesn't work, every winning strategy that we have stopped working, right? Not because it's the strategy is flawed, but because the complexity, the reality is so complex around us that there are so many moving parts that some of them go off at the same time, creating this bigger chaos. All right. So again, why is this important for you to know this? Because now that you're aware of this, you can expect that once in a while, those big liquidation cascades where many things go off, even though they shouldn't, they happen. Which means that in the future, you can expect that more of those types of situations happen. Well, why is it so meaningful to you? Because you have to be ready for that. All right. So all of a sudden your attention changes from moving, I should say, uh, preserving the profit or just maximizing the profit, to you understanding that, okay, beyond optimizing the profit, there's also me being ready to withhold and withstand those big liquidation cascades that come basically once in a while. I don't know when that's going to happen. Well, I can try to predict, but with any predictions, it's always possible that it's not going to be true. Uh, but all that no matter when it's going to happen, it's going to happen, 100% guaranteed. Because once in a while, the reality, like I said, all the stars align somehow, and everything that can go wrong just goes wrong, and this liquidation cascade goes on, right? So. Uh, the only way to avoid ruin, basically, because if the liquidation cascade comes, then we're talking about financial ruin, losing too much money at a too short time. All right. Then The only way to build it all back is through having a trading system. All right. And having this trading system that's not going to give you 100% win rate, but the one that is going to be sufficiently good enough for you. All right. And with trading systems, just like I said, it's a combination of many moving parts. It's a combination of, as it says on the upper right corner, upper left corner, sorry, excuse it, markets, position sizing, entries, exits, stops, and tactic. This is the simplest like a constitutions, constitution, so to speak, composition of those factors, of those moving parts that comprise altogether the trading system, right? So the trading system is full only after we have the answer for what to buy or sell, how much we buy or sell, when to buy or sell, when to get out of a winning position, when to get out of a losing position, and how to buy or sell. All right. And there's a whole trading plan template, of course, that is kind of like a little bit more visualized on that. But in the end, you know, we have to have those systems uh, because they are the only way for us to have and put this discipline into action as we go, right? Knowing that the future is uncertain, knowing that there's a lot of entropy, knowing that those liquidation cascades and those FTX type of crashes, those BitMEX type of crashes for mining, mining capitulation 2017, uh, those big kind of like empty GOX hacks, that happened in 2014, or Terra Luna crash that collapsed basically, right? The FTX, the Donald Trump earlier this year with trade wars and so on, the liquidation cascade that happened, it's gonna keep on coming in many different shapes or forms. Reshuffle everything, get many people out, right? And leave the market in the PTSD mode for some time. And the only way for us to survive this is through being able to have a trading system. All right. That consists of all of these six factors above. All right. So it's the markets, it's the position sizing, it's entries, exits, stops, and tactic. And only then, after we have answers to those six questions, only then we can build the trading plan, the trading system, and be able to survive those crashes. All right. And of course, this trading plan, this trading system, uh, especially if you're focusing on shorter term trades, if you're not ready to hold your Bitcoins for the next 20 years, but you have to get in and get out sooner or later, then this is where you insert this trading plan, right? If you have it buy and hold, then by definition, you buy and hold it, you don't sell it, right? However, it doesn't necessarily need to be that because Michael Saylor is buy and hold, right? Type of an investor that you have to do it. So there's a whole set of documents I also prepared the other day for you to answer, later on as we go, for the 30-day recovery program that you're going to be able to get proper access to and then just answer all those questions. All right. But in the end, what matters here for this one is basically that we need to decide our strategy, what fits best. And the strategy is different than system. Strategy is what takes us from point A to point B. Trading system is a tool, is like a car that takes us from point B, from point A to point B, right? But the whole direction, the strategy, like I said, how we're going to get from point A to point B is either a buy and hold or a position trader or a swing trader or a day trader, intraday trader, right? There are different types of trading because if you want to buy and hold, by definition, you buy and hold, and you don't sell it. If you're a position trader, you have a position in a particular direction of a market for some time, right? And whenever that direction changes, well, you get out of the position. Uh, well, for swing trading, it's definitely a shorter term game, right? Because those swings typically last, days to weeks. Position trading takes weeks to months, right? If that makes sense, because you're setting yourself up for those bigger secondary movements, while swing trading is for short-term movements. And day trading, well, as the name suggests, is for the day trading. And by understanding again that, of course, it's not a matter of what name you like most, right? Whether okay, I want to call myself a day trader because that's what I see a lot of people like, right? It's exactly what fits your own life situation. Perhaps, how much money you have, perhaps your obligations, perhaps if you're a family man, if you have a job, if you have a 9 to 5, if you have other assets and liabilities on stake, and so on. All right. So knowing of all that right now, what I think everybody should be aware is that basically most traders are loss averse. So by definition, we're gonna fear losses more than we will love winning. That defines our risk preference, all right? That defines our risk preference profile, whether we are risk seeking and we want to go and gamble away our money basically for fun, or we are risk neutral, or we are risk averse. Most people by the nature are loss averse or risk averse. All right. So it has to fit your own personal, private life situation. Um, some people just feel okay with taking risks, the other don't. And it's not that you have to adjust it to the way you feel about that. So in the end, when we talk about this particular tactic, the bottom upper left corner again, tactic, how to buy or sell, if we focus on that, right? This is where technical analysis comes into play, and this is where we talk about, well, generally 4 different tactics, right? First is a trend following tactic or methodology. Second is mean reversion tactic or methodology. Third is a chart pattern recognition tactic or methodology. And the fourth is exogenous signals, right? I'll give you an example. Trend following means that you're going to set yourself up only in the direction of a trend. If this is bull market, you're only going to be playing long. If this is bear market, you're only going to be playing short positions. Mean reversion assumes the exact opposite, because instead of assuming the trend longevity, you're going to assume, okay, trend reversals. Okay. So you're going to assume that whenever there is a support, the market is going to twist up, and whenever there's resistance, the market is going to twist down, right? In reality, for any of those, the key finding is that the most profitable systems are based on trend following breakout methodology. So trend following means in the direction of the trend, and breakouts are based on price breaking out to new levels. All right. So not playing the mean reversion, but playing the breakouts. Not playing the reversals, but playing the continuation. All right. And it may come a little bit surprising to many of you. However, the best trading systems, the most profitable ones, which means the ones that have the biggest P&L at the end of the session, are those that have 30% win rate. All right. Those that have 3 out of 10 trades that are won. That means that 7 out of 10 trades are lost. So you're gonna lose 7 out of 10 trades. And it's only how you manage those losses, which takes us back to the grief cycle, which takes us back to the necessity of having, to the awareness of having this entropy in the future, and this unpredictability, to the entire sense of what the trading systems are, of the strategy that we have, and so on, something that we discussed overall with this document so far. It is only that we are going to be experiencing massive incline, massive rise in the P&L, as in how profitable we get as traders, by how closely we stick to those trading systems. All right. So if you have a series of 7 losses in a row, because it's possible, right? Then only if you know that this trading system is tested, is proven to be working, and I'll give you an example of a trading system in a moment, then you have to have a complete faith into that system, that even if you suffer the 7 losses in a row, then you still have a very good chance that you're going to make money on top of it, right? So it's not about those small losses you're going to accrue in the process, maybe in sequence, one after another. It's knowing that at the end, or in the end, this trading system is profitable, which means that it's just a delayed effect. So your job is to believe and remember that even the series of losses come up, it doesn't make sense to give up because this system wins in the end, right? So it's only how closely we tie up to it, and it's closely how closely we put discipline to applying this, that we're going to be profitable. Because if you, of course, lose 7 trades in a row, or even 10 trades, in a row, then you say, okay, so this system sucks. While the 11th trade that you would have taken is the one that is going to pay off all the small losses and give you a huge profit on top of it. So you can. That's where they say that's why you hear a lot of traders on Twitter say, on crypto Twitter say, you make it back in one trade, right? It's possible, but you have to give yourself a chance to go this far. All right. So it's possible that you're going to have one big win that is going to take on all the small losses in a process and give you a huge margin on top. So it's possible you're going to have 10 losses, 2-3% each, that you're going to have then later a 70% win, right? But you have to remember that the best, most profitable trading systems, most profitable means those that have the best P&L, those that have the biggest financial outcome, those that make you the most money, are the ones that lose 70% of the time. So that's why I say you have to understand why you want to apply the system. Because if you want to maximize the amount of money that you gain, well, this is the system that you do. But by applying this, you have to be aware that, okay, it's going to cost me 70% of the time losing money. It has to make me feel comfortable with how often I lose. But because I apply this proven, backtest, profitable trading system, it's me knowing that in the end, I'm going to have and expose myself to this big win, this fat tail, so-called, that is going to give me all the losses recovered. All right. And it's not going to happen if you quit before this big win happens. And I personally use my trading trend following breakout systems that are based on volatility, that are based on average true range, right? ATR, average true range, is a matter of how dynamic the market is, of how it changes, right? So you can compare it you can simplify this by thinking of the daily range and make it an average over the last, I don't know, 14 days or so, right? So have the highest peak of the last 14 days and the lowest peak of the last 14 days, and that's your ATR. All right. So how does it all connect to having this system, to finding your way in, basically? Because, well, it's the second day of 30-day recovery program, which means there's still so many of the lessons, so much of your time to be had up there. That is just the beginning. This is basically the starter, right? So if you I brought up the coin flipping parallel before, right? However, if you flip a coin 10 times, doesn't make you a good trader, doesn't make you a good coin flipper, or you just got lucky. Well, spoiler alert, you just got lucky, right? If you find $1,000 banknotes, worth of banknotes on the street, doesn't make you a good trader, or you just got lucky. Well, you just got lucky. If you got lucky and you start thinking of yourself as the best trader, this is where you fuck up. Because you continue, then the next step is, if I'm such a good trader, then I'm gonna bet more. Then I'm gonna increase my leverage double. And I'm gonna bet more and have higher risk. This is where we fuck up, right? Because this is where we say, okay, we are better than we are in reality. It feeds our ego. We feel good. We feel overconfident. We say, okay, like, who cares? We have so much money. We're definitely gonna beat this. There's nothing that can stand in our way. And this is where we literally screw up. And when we screw up at our best, well, when we screw up at the very peak, absolute all-time high of our wealth, well, guess what? This is the maximum peak risk as well. This is the amount of money that we're going to lose, right? So in the end, when designing a trading system, we have to get our mindset straight. We have to know that losses will occur, which is why we have to keep them small. And there's this holy saying, 2% risk per trade rule. I'm going to talk about it later on the next sessions. We have to understand that the profits will not occur constantly. That it's possible that you're going to have a series of 10 losses in a row. But it's possible that the 11th trade that you're going to take, that most of the people would have quit until then, is the one that's going to pay you off the most, which is why you have to be organized, which is why you have to expect that emotions will likely cause you to change your direction. The emotions, when you lose 10 times in a row, your brain is going to tell you, you suck at it. Don't do it anymore. While in reality, the last following trade just maybe is the one that's going to give you a big win, right? Which is why this plan overall needs to be consistent with your availability. If you want to be a day trader but you have 9 to 5 job, it's not going to work. You're just trying to force something that cannot happen. Then we have to test and backtest our systems and be disciplined to apply them, right? And um, one of the simple trading systems, could be that you have a crossover of two moving averages at the upper corner, upper half flip. Bitcoin dollar chart. The red curve is a 200-day moving average, and the blue curve is a 50-day moving average. Every 50-day crossover to the upside, cross to the upside over 200-day moving average is a buy. Every cross to the downside over 200-day moving average is a sell, right? You can have a simple one like that, right? A faster moving average and a slower moving average. A 50-day and a 200-day. 50-day crossing over 200-day is going to mean buy. 50-day crossing to the downside or below 200-day average is a sell. So it can be as simple as that. All right. And the more complexity you give it, the more complicated it's going to get, right? And the more reasons it has not to work, right? So the nature in generally, it's called parsimony principle. The simplicity wins. We have to keep it as simple as possible, right? So if you take such a test, for instance, right? Such a trading system, well, you can play around with it and see how that works, right? One of the good metrics, for how profitable systems are and strategies, basically is a Sharpe ratio, basically telling you how much money you make versus how much risk you took. Okay, so it can be the biggest win against the biggest drawdown, or the average gain against the average loss, for instance. All right. Uh, Here's an example of the trading system. With a $10,000 account, you assume that your risk per trade is 1.5%. Your entry rules for the Bitcoin dollar chart on the daily Bitstamp exchange is 50-day over 200-day positive crossover. Exit rules is a 50-day over 200-day negative crossover. Initial stop is an entry diminished by an ATR. So use ATR, daily ATR, basically, to put it away. So one measure of volatility below your entry. If the market exceeds one day daily measure of volatility below your entry, you basically have initial stop, right? If your exit, like I said, is positive, if you make money on it, then you exit at a profitable negative cross, right? And if you lose money, then your stop is basically the entry minus ATR. So for this particular one, the backtesting results yielded 3,815% over 221 trades with a 33% win rate. All right. The max drawdown at 47%. So it's a long-term regime, right? However, it's profitable at a 33% win rate. It's very decently profitable. All right. So it's an example. And like I said, all this file, I'm gonna insert it right after this stream inside of the recovery channel on Discord. And all those things that I mentioned, all the grief cycle and understanding about the simplicity, the entropy, right? Our emotional baggage, how we have to solve it, the discipline, the mindset that we need for the recovery. Well, I put it in a little bit of a quantitative action points, right? Table, right? I call this program basically Burb for whatever reason, where you contribute weekly to having an action point. First week, it can be as soon as this week. Understand where you are in the grief cycle so that you reach acceptance. The next step for the phase two is define your risk preference, pick a trading style, learn about the systems. All right. Phase three, set up your trading system, market entries, exits, stops, and techniques. And the fourth, the last one, is to start executing your first trades and kick off your journey to profitability. And that's as simple as that. And a couple of takeaways. The worst trading mistake is not following any system. Mistaking luck for skill is the deadliest of them all. Discipline in applying trend following systems will yield the most returns. The percentage gain is not everything, it's also how much money you lose. And the reliability with risk management regime is going to save you from ruin. So all those things concerned everybody. I think they are where you start your recovery, right? And I think it's a great fit for the second day of our 30-day recovery program because it helps you with a particular instruction, with a lot of details, with a lot of examples over this document that I prepared for you. And it has a tangible plan. And it is confirmed that if you contribute to this plan the way we discussed, well, you're definitely going to be a step closer to being where you want. But then you have to know where you want to go. So always starts with why. And I promise for it to take a little bit shorter. There's been some technical mess up on the Restream side. As far as I'm concerned, I think there was a float link in the first place. Though all in all, for everybody who's watching and listening, I do invite you again to come to our 30-day recovery program. If you haven't signed up yet, there's only 300 seats, and most of us already taken. So if you still haven't joined, but you want to join, you want to go to thebirdnest.com recovery. Exactly this, to thebirdnest.com recovery. And that's where you claim your free access. You connect your Discord account, and by doing so, you're going to get an automatic admission to our Discord, and you're going to have all the channels basically activated, and you're going to be rallying with me, with our team, for 30 days to rebuild your confidence and have so many of the sessions just like this one. And I think that's a perfect place to wrap today's session. I appreciate your contribution, for everybody who's watched this. Thanks for watching. Thanks for tuning in. And by doing so, by watching this, by following this file that I'm going to drop inside of the channel that you have access to, this recovery channel, you're one step closer. And then you have many more days to get you there. So thanks for joining. God bless you. I'll see you around.